Welcome to Wiki Dollar. Today, we're going to break down one of the most powerful ways to build long-term wealth, real estate investing. If you've ever dreamed of earning passive income, owning rental properties, or simply growing your money faster than a savings account, this video is for you. Let's simplify real estate investing step by step. No confusing jargon, no complicated math, just clear and practical advice. What is real estate investing? Real estate investing means using your money to buy properties, like houses, apartments, or commercial buildings that can generate income or increase in value over time. In simple terms, you're buying something today that can make you more money tomorrow. For example, you could buy a property and rent it out for monthly income, or buy a property, hold it for a few years, and sell it later for profit. Real estate has always been one of the most reliable wealth-building tools because, unlike paper money, land and property tend to grow in value over time. Why real estate is a smart investment? Let's face it, inflation is real, and the value of money keeps dropping. But property prices usually rise. When you own real estate, you have an asset that beats inflation and can also generate income every single month. Here are a few reasons why investors love real estate. Cash flow. Rental properties can give you a steady income stream. Appreciation. Property values tend to increase over the years. Tax benefits. You can deduct expenses like repairs, mortgage interest, and property taxes. Leverage. You can buy real estate using borrowed money and still earn profits as it appreciates. Tangible asset. Unlike stocks, you can see and control your property. In short, real estate gives you financial security and long-term growth. Types of real estate investments. There are many ways to invest, even if you don't have a huge budget. Let's look at the main types. Residential properties. These are houses, apartments, or condos you can rent to families or individuals. It's the simplest way to start investing. Commercial properties. These include office buildings, retail shops, or warehouses. They can be profitable, but often require higher investment and management. REITs, real estate investment trusts. Don't have the money to buy a property? You can invest in REITs, companies that own real estate and pay dividends to investors. You can buy REITs just like stocks. Vacation rentals. Think Airbnb. Buying a property in a tourist area and renting it short-term can generate high returns if managed well. Land investments. Buying raw land and holding it until the value increases or developing it for profit is another strategy. How to start investing in real estate step by step. Step 1. Educate yourself. Before buying anything, learn the basics. Read books, watch videos, or follow real estate channels like Wiki Dollar. Understanding how real estate works will save you from costly mistakes. Step 2. Set a budget. Know how much you can afford. Check your credit score, list your savings, and talk to your bank about financing options. Remember, you don't always need to buy a luxury property. Even a small apartment can be a great start. Step 3. Choose the right location. Location is everything in real estate. Look for areas with job growth, good schools, transportation access, low crime rates. A good location means higher rent and faster property appreciation. Step 4. Run the numbers. Before you buy, calculate your potential profit. Consider purchase price, repair costs, property taxes, rental income, maintenance expenses. A good rule of thumb, your rent should cover your mortgage and expenses and still leave a little extra for profit. Step 5. Start small. You don't need to buy a big apartment complex. You can start with a single-family home, a duplex, or even house hacking, living in one part and renting out the other. Step 6. Build a team. Successful real estate investors often rely on a team, an agent, a mortgage broker, an accountant, and a property manager. Don't try to do everything alone. Step 7. Manage or outsource. If you're renting out a property, you'll need to manage tenants, repairs, and rent collection. If you don't want to do it yourself, hire a property management company. It's worth the cost for peace of mind. Step 8. Keep learning and expanding. Once your first investment is stable, you can refinance, pull out equity, and invest in your next property. That's how real estate builds wealth over time, one property at a time. Risks and things to watch out for. Every investment has risks. In real estate, here's what to watch for. Vacancy periods, times when your property sits empty. Unexpected repairs, always keep a maintenance fund. Market downturns, property values can fluctuate. Overleveraging, borrowing too much can be dangerous if rents drop.